Hey guys, I talk a lot about monetary contractions and stock market drawdowns, but every example. Oh, by the way, this is Brian Lewis from MMT Investing, and things just changed. So I talk a lot about monetary contraction drawdowns and the stock market, and kind of I've looked at the crash that's going on right now. I looked at the 2018 drawdowns. There was a couple that I used as an example. Um, but I mean, we've been on a 10-year bull run, so all of these examples um, have been drawdowns during a long-term bull market. But so, for instance, like here is the whole dot-com run up after the dot-com crash, and we get a couple of them. Like here's one. We get drawdown, bounce, bounce. Um, Here's one, drawdown, bounce, and then it bounces up, right? Here's one, drawdown, bounce, bounce, right? So that's what they look like on the way up, and that's pretty much what they look like on the way up uh, on the long bull market as well. I mean, let's take a look. Like here's one, drawdown, bounce, bounce, and then here's a drawdown, bounce, and bounce up, two in a row. So like when they draw down and bounce low, that's usually going to be like a monetary contraction where growth is going down at the end of the contraction, but it can also draw down and it can bounce up if growth is going up. So let's see. No, let's see. Here's one. Drawdown, bounce, and bounce down, right? Here's one. Drawdown, and the middle's fuzzy. No, it's not. It's a draw, bounce, and then it runs up, and bang. Like, we can look at this and see where it went. Okay, yeah. So here's your drawdown. Here's your divergence, and then here's the bull trap in the middle, and the intermediary bottom, and then the top bottom's up here. So that's a weird one where the growth went way up after the contraction. So this is a weird kind of bull market thing. So I don't know, if you follow Hedgeye, they'll talk about quadrants like quad 3, quad 4, or whatever. So like quad 4 is where it bounces and then bounces lower, draws down and bounces lower, because you get the contraction and then the growth is negative, so you get lower bounces. And then the ones where they bounce up is more like a quad 1, where it draws down on the credit contraction, but your growth is up, so then you're bouncing uphill, right? Um, so these are all bull markets. So this is like a quad 4 drawdown in a bull market. So drawdown, let's zoom in on the MACD a little bit. Okay, so you get your crossover, and you get your intermediate bottom here, and then you get your late bottom here. So that's a draw, bounce, bounce. And these are generally 3-month-ish, but this one's pretty short. So they can be 2 months. They're usually 3. And then here's a draw, dead cat. Oh, you know what? Let's go back and look at this. No, that's it. It's just a short one. But here, like this is just a dead cat on the way down of the draw. So that's a draw, and then a bounce, and then a bounce. This is a little bit of a longer one. I think it's a little bit longer than 3 months. And then again, this is a credit contraction, like a quad 4 credit contraction on the way up on the bull market, and then here's one here, and this one draws and then just bounces sideways. So this is probably right in between quad 1 and quad 4. So the inflation is going to be down. This is a credit contraction, but the growth is flat. So it's just bouncing sideways. Or the growth is actually probably down a little bit because we're in a bull market. So if you're bouncing sideways, you're kind of bouncing down against an uptrend. So I would say this is like a little bit of a quad 4, not a quad 3 in this one. Okay, but then here, now, we just switched to a bear market. And this is what a drawdown looks like in a bear market. Here's your dead cat. This is your drawdown, and this is 1 month. And this is a big bubble, so this is the proportions of what's happening here. That's 1 month, and then this is 2 months, and then this is 3 months. So that's my projection on this. This is a deep quad 4 drawdown in a bear market. So I mean, I've done a lot of looking at these kind of drawdown situations, mostly in bull markets, because that's what we mostly have is bull markets. But there is 1, 2 good ones right here on the backside of the housing bubble that I'm going to zoom in on and get into. All right, so it's easy to tell where they start on the MACD here because you get the crossover, and then it draws down. All right. So yeah, this one's super messy because you get a triple bottom, so it's really hard to tell where the bottom is. It's probably the middle. I don't know. It's the middle one. It's really hard to get a lower bottom once you've done one bottom here. Like it's hard to get a lower bottom. The first bottom's usually the lowest, but I don't know where to count on this one. It's hard to time out because I don't know how far it went out. It's probably the first one. So crossover, what's that? September 1st, and then out to October 9. So this is a little bit longer than a 3-month cycle, it looks like. So you're gonna go like a month and a day here, and then a month and a day here, and then you can see crossover on the MACD, and then bang, you get your intermediate bottom, and then you go up here, and then bang, that's your late bottom way up here. So yeah, so drawdown, bounce, and bounce. And it's easier to see on the MACD because you can see pretty clearly where it kind of crosses over and bottoms. So this is a contraction here, and that's a quad 4 contraction, drawing and bouncing down. And you can see like on the backside here, when you're in a bear market, these contractions can be huge drawdowns. I mean, you get a huge drawdown, and then a bounce, and then another huge drawdown. So that's kind of the typical model for like a quad 4 drawdown, and then there was a little run up here. Let's see. I guess this looks like a drawdown too. So that's your intermediate bottom, and then here, and then it switches out into the next cycle here at the peak, and this is another drawdown. So this is 2 in a row. Yeah, this is a drawdown, and then a bounce, and then a bounce to here. That's your second bounce. So this is a super choppy uphill second bounce. And then right into another credit contraction cycle, like immediately after, with a little drawdown. And you can see it cross like way up here. And then you get, let's see, how long is that? From 7 to there. I mean, this is just a really short one. And then this looks like your bull trap. This is the tiniest bull trap ever. So you get a drawdown and then a mini bull trap here. And so this is a really short one. So it looks like the drawdown and the bull trap were halfway, and then the next bounce was down here. So yeah, so in a bear market, you can pretty easily get 2 big downward movements on these drawdowns, and there's not a lot of good examples. The S&P doesn't go back far enough to get any of the dot-com bubble. There's probably some good ones to look at on the backside of that too. But yeah, anyways, that's what a quad 4 credit contraction drawdown looks like on the stock chart, and you can use the MACD. It's really helpful. Um, like you get the crossover and you get this drawdown underneath, and then you get one bottom and two bottoms. So it does it like every time. Um, Drawdown, mid, and then late bottom up here is a weird one. And then here's one, crossover, draw, mid, and the late one way up here. That's a weird one. Um, yeah, those are probably not. These are probably not quad 4 drawdowns. These are probably quad 1 drawdowns where growth is positive, but you still start with the drawdown. And then I don't know. I don't know if there's like a quad 1 drawdown on the backside of this thing. Or eh, hmm, yeah, I don't know. I don't know what they look like on that side. I don't have any examples. Yeah, so anyways, yeah, here's the difference between a bull market drawdown like this and a bear market drawdown like this. Um, so I mean, this is my current model, what it looks like is happening right now, because we just crossed over. We got our dead cat bounce, we got our bottom. This is 1 month, and then we just ran across this downtrend into what looks like a bull trap here. So, um, yeah, I mean, I think this bounce is a really good bet, and then depending on growth and what's going on, I don't know, this could bounce sideways, this could bounce up, this could bounce down, way down. I don't know the last one. I just kept on the trend line as a general guess here, where that'll bounce to. But anyways, this is a quad 4 credit drawdown cycle, 3-month cycle that we're in right now. And if you are long the stock market and you're hoping for a V-shaped recovery, then your V just ended. So be safe. I hope this helps. Uh, if you want to protect your money right now, if you don't know what's going on, I think that just having dollars is a great move right here, or having gold is okay, even though gold's a little bit trickier. Gold will pull down and then it'll bounce up real hard, and it'll pull down and it'll bounce up really hard. So I mean, those are the only two things really that hold up in this kind of drawdown is dollars and gold. Everything else goes down. Even well, I mean, maybe some of the like medical stocks might be able to stay up, but it's just risky and pointless to do that. I mean, you just hold cash in this situation until you figure out what's going on. Um, this is not trading advice. These are just my ideas and what I'm trading. And please smash the like button if you think that's interesting, and maybe subscribe, and happy trading.